Just looking at this decision, it is exactly what we expected in the sense that they stood pat here. Why? Well, they've told us why. They've said inflation's continued to fall. Most of the measures of underlying inflation are easing. The rate level's making substantial contributions to reaching that 2% level. But you've already seen services inflation sticky, yes, but growth prospects in the euro area improving. So it gives them room to wait a little longer. They have said that they want to wait for that wage data in June before making the decision. So as you say, really in this press conference, we're listening to Christine Lagarde on her tone as to the path for rates beyond June, because economists were expecting quarter-point cuts each quarter off the back of this. You've seen traders changing their pricing, holding ECB rate bets steady, in fact, pricing 19 basis points of cuts by June. So that's the reaction in markets.
Lizzy, this line here from the European Central Bank, not pre-committing to a particular rate path. Lizzy, how different is the communication we're getting from the ECB, or how similar is it to the coverage that you do for us over at the Bank of England? How similar are those two stories at the moment?
Nobody wants to be the unreliable boyfriend, John. Look, from the ECB, there's nothing explicit here, and that's kind of what we expected, that they're not going to want to make commitments before seeing that crucial wage data. And it's the same picture in the UK from the Bank of England, because there's so much uncertainty in the economic outlook at the moment. But the big question for the ECB is, when the divergence from the Fed, as you say, looks inevitable, what about euro weakness? I know you spoke to Mohamed El-Erian warning about euro-dollar parity. Will Christine Lagarde in this press conference mention that volatility in the exchange rate and the potential for it to feed back into Eurozone inflation? That's what I want to listen for.